Hey everyone, welcome into Market Takes. You know what? I know you could have been anywhere in the world, but you're here with me, and I appreciate that. I am Dion Rabouin, reporter for the Wall Street Journal. Listen, it is a short week, but we are still getting lots of data out this week. I'm going to tell you the three most important things you need to look out for this week, and they are three reports that are all coming out on Thursday. We'll be right here doing Market Takes Thursday at noon. We usually do it at 10 a.m., so make sure you adjust your sleep cycle and all that so you catch us here on Market Takes Thursday at noon. But we're going to be talking through today the existing home sales report that comes out on Thursday, the leading economic indicators report that comes out on Thursday, and the initial jobless claims report that also comes out on Thursday. Thursday is going to be a big day. I'm going to tell you why. So first things first, let's talk about that existing home sales report. That is the main report on the housing market because most homes that are sold in the United States are existing homes, as in already built homes, not new homes, one that you buy that was built in the 50s, 60s, 70s, 80s, et cetera, et cetera. That's the big one, and that shows us what's happening with about 80% of the housing market. But what we have seen recently is some data on those new home sales that suggest that maybe that's part of the market is heating up and the existing home sales market could be heating up as well. So far this week, we have already gotten the NAHB housing market index as well as the new home starts or housing starts. That data came out on Monday, and just this morning on Tuesday, we have seen a big pickup. First things first, I want to throw up here on your screen the NAHB housing market index. Now, this data shows a very clear trend, and this is what we're seeing across the new homes part of the housing market. Very clearly, home sales declining, and that's really market sentiment. That's how folks feel about the housing market. When we talk about the existing home sales report, when we talk about the housing market report, that's a survey of about 900 home builders. A reading above 50 indicates a favorable outlook on home sales, below 50 indicates a negative outlook, and as you see up there on your screen, we had fallen well below 50, hitting almost that 30 level at the end of last year, and then starting this year, you see month over month, every month picking up and rising higher. And so just last month we got a reading of 55 on that outlook. And so that just illustrating very clearly that confidence, optimism, the outlook on the housing market is really picking up. Those home builders are going out, building more homes, putting more inventory out there. That should provide more supply. And as we know, there's a lot of demand and supply is rising. That could do something to bring down prices, in the overall housing market. But again, we have not really seen that same pickup, and we need to see a decline in the number of existing homes sold to bring down those prices. So a very clear trend when we see what's going on with the home builder index, with new home sales. New home sales actually were the highest since May of 2022. We also saw the NAHB housing index. That was the highest since July of 2022. And the housing starts was the highest since May of 2022. And we saw those new home sales rise in a big way to the highest since May of 2022 as well. So housing starts, which is the forward-looking indicator, how many homes were actually built. Housing construction, or how many new residential permits started on being built, that was the highest since May of 2022. The NAHB housing market index showing home builder confidence, sentiment, all that, highest since July of 2022. And the new home sales was the highest since May of 2022 with 683,000 units sold. This really just showing us that the housing market is booming and coming back in a big way on the new home side. But as I said earlier, existing home sales are what really matter, and we will get that report on Thursday, and we're going to find out if the existing home sales trend has continued along with the new home sales trend. So let's throw up here a chart on your screen of the existing home sales and what we've seen from that report. As you see there, new home sales have been declining in that same way over the past year into the end of the year, and then in January we got a big pickup in the number of existing home sales sold, and that has actually been declining. So if we see that trend continue, that could put downward pressure on prices, and that could be a good thing for the housing market. Now that chart up there on your screen just illustrating that we have seen, a turn down in existing home sales, but still above the level and the trend that we saw coming into the end of last year. Why does that matter for the everyday average person? Well, if home sales prices are coming down, right, that means that rents can come down because those landlords that are buying those houses and renting them out to people aren't going to be paying as much. They're not going to need to make as much in rent to justify that purchase. That's going to allow them to give some flexibility to their tenants, going with the overall economy. But if those prices keep rising, keep getting higher, as we've seen with the new home sales market, that could put upward pressure on inflation, push inflation back up. That gets to the Fed, that gets to asset prices, all of those things. So that would be an overall negative for the market. So you're going to want to watch that existing home sales report that we get out on Thursday. We're expecting to see another decline in May, just like we saw in previous months in April and in March before that. But if we don't get that and we get an unexpected pickup, that could be bad news for the market. So you'll want to watch out for that. Next thing I want to talk about is the leading index, or the leading economic indicators index. I want to put a chart up here on your screen to show you what we're seeing from that report as well. Now, this report, much less bullish. There's really not a lot to it. As you see there, when the index starts falling below, when the index of leading economic indicators falls below 0, we tend to have recessions. You see that when it holds below that consistently, recessions tend to follow it. And we saw it in 2008, we saw it in 2020, and it looks like right now we are seeing that same trend, and actually a more clear and long-term trend in that leading economic indicators report. So that chart is illustrating just the clear trend that we are in right now with those numbers. May expected to show another decline, actually a bigger decline than what we saw in April. In April, the leading economic indicators report declined for the 13th straight month. So we've seen more than a year of continued decline on that report, and actually it is a steeper rate of decline for the previous 6 months than the 6 months before that. So really just showing right now things are not good. The LEI is the Conference Board Index. It usually is a good predictor of GDP. GDP is how we measure recession. So when it goes down, generally we tend to be in recessionary territory. It includes things like the S&P 500, the Treasury yield curve, credit indexes, but also a lot of things like manufacturing data, business surveys like the ISM and Purchasing Managers Indexes. So we know the S&P has really picked up. We know that stocks have been booming lately. That could push that index back into positive territory. Definitely will be something you want to look out for. The Atlanta Fed's GDP Now report showing expectations for the GDP to come in positive, almost right at 2%. The Federal Reserve is expecting GDP to recover this year and stay out of that negative territory. So we shall see. This will be a good report that you'll want to watch on Thursday about what happens. Last thing we want to talk about is those initial jobless claims number. Let's put this chart up here on your screen of initial jobless claims. And look at that. You see there, we're seeing a clear trend of picking up. But most importantly, as you see on the far right of your screen, those last two numbers have been the highest we've seen since January 2022. So well above the trend. And we don't know if those are outliers. Are those something like what we saw a few weeks ago or a couple months ago with Massachusetts having some fraud in its claims? Are those, though, the start of a trend? And if they are, could we be seeing big pickups in unemployment and layoffs? And could that be a sign that the job market is starting to weaken, the labor market is starting to weaken? So keep your eyes on this report, the U.S. initial jobless claims. That's how many people are applying for unemployment insurance and things like that because they've been laid off. This chart illustrating that we have seen a very clear pickup over the last 2 weeks in that data, and we'll look and continue to see if that trend continues. So we're going to break all that down here on Thursday at noon on Market Takes. I hope you'll be with us. I hope you'll be with me as you are today. Thank you so much. I'm Dion Rabouin, reporter with the Wall Street Journal, and we will see you right back here Thursday at noon on Market Takes. See you next time.